Welcome to today's market report.
European stock markets edged higher on Monday, started the week on a positive note following strong Chinese growth and ahead of a key Federal Reserve meeting. DAX in Germany traded 0.3% higher, CAC 40 rose 0.6%, climbing to its highest level in a year. FTSE 100 climbed 0.6%. Data showed on Monday economic activity in China soared at the start of the new year as the world's second largest economy recovered from the ravages from the coronavirus pandemic. Investors are also expecting strong growth figures out of the US in the month to come, particularly after President Joe Biden signed the $1.9 trillion stimulus package into law last week, and with the rollout of COVID-19 vaccinations proceeding at pace. This positive tone has filtered through to Europe, with travel and leisure, automakers and food and beverage sectors among the top gainers. Danone stock rose 4.7% after the French food group announced that Emmanuel Faber would step down as chairman and CEO after activist pressure. Roche stock rose 0.8% after the Swiss pharmaceutical giant announced Monday plans to buy GenMarkDiagnostics, a US-based maker of molecular diagnostic tests, in a $1.8 billion deal. However, despite these gains, concerns are growing in Europe about the spread of the COVID-19 virus. On Friday, the head of Germany's public health agency warned that a third wave of coronavirus infections has begun, while Italy is set to impose another national lockdown over the Easter weekend. Additionally, a number of European countries, with Ireland becoming the latest, have suspended the use of AstraZeneca's COVID-19 vaccine after reports of serious blood clotting in recipients. Elsewhere, the Federal Reserve meets this week, and investors are starting to fret that rising inflation expectations could prompt the US Central Bank to signal it will start raising rates sooner than originally envisaged. The 10-year US Treasury yield stood at 1.635%, having risen to as high as 1.642% on Friday, a high last seen in February last year. The Bank of England and the Bank of Japan also hold rate-setting meetings on Thursday and Friday, respectively. Oil prices climbed on Monday, with the international benchmark Brent heading towards $70 a barrel on signs of strong Chinese economic growth, pointing to more demand from the world's largest importer of oil. Crude futures traded 1% higher at $66.25 per barrel. Brent rose 0.9% to $69.86 per barrel. Gold futures rose 0.3% to $1,724.90 per ounce. On the FX front, the GBP-USD pair seesawed between tepid gains, minor losses through the mid-European session, and was last seen trading in the neutral territory around the 139.20 to 139.25 region. Repeated failures near the key 140 psychological mark, which coincides with the 50% Fibonacci level of the 142.43 to 137.79 corrective slide, constitutes the formation of bearish multiple tops. That said, the GBP-USD pair so far shown more resilience below the 139 and round figure mark or 200 hours SMA. This is closely followed by the 139.80 to 139.85 conference region, comprising of over 1 week old ascending trend line and the 23.6% Fibonacci of the 142.43 to 137.79 corrective slide. Bearish traders are likely to wait for a convincing break through the mentioned support before positioning for any further downfall. Meanwhile, neutral technical indicators on 4-hour daily charts haven't been supportive of any firm direction. Investors now seemed reluctant to place any aggressive bets and preferred to wait on the sidelines ahead of the FOMC policy meeting on Wednesday and the Bank of England meeting on Thursday. In the meantime, sustained weakness below the mentioned conference support will be seen as a fresh trigger for bearish traders. This might turn the pair vulnerable to accelerate the slide towards
testing the 138.30 to 130.25 intermediate support en route to monthly lows around the 137.80 region. On the flip side, immediate resistance is pegged near the 139.55 to 139.60 region, which, if cleared decisively, might push the GBP-USD pair back towards the 140 mark. The ECB announced that it bought a net 19.303 billion euros of assets in the week to March 12th as part of its quantitative easing program, compared to 17.068 billion euros in the previous week. This development didn't allow the shared currency to stage a rebound against the greenback, currently trading at 119.30. The dollar index held at around 91.84 early Monday morning. This is today's market news. Thanks for listening. We'll see you next time.